Hello traders, welcome to my channel. This video I'm going to be giving you this a forecast on volatility 75. So we are going to be doing a weekly forecast on how volatility 75 can probably be moving for the next few days, and this is a strategy that I'm going to be explaining, which can also be used in trading other markets as well. So you want to make sure you watch the video till the end. We are going to be looking at the ranging nature of how you can trade range, okay, and also how you can do a top-down analysis to trade ranging markets and get good trading opportunities. All right, so make sure that you watch to the end, and if you are trading derived and you have not come across this channel before, make sure that you subscribe to this channel by hitting on the subscribe button and notification bell so that you don't miss out anytime I bring analysis. Okay traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX 75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. So here we have derived in front of us, we have volatility 75 in front of us here, right? So basically we want to do a top-down analysis, and then we also see how we can forecast the markets. Now if you look in the bigger time frame, if you look in a daily, you are going to see that we have a downtrending market. We have a series of lower lows and lower highs, right? So in this downtrending market here, we have price actually pulling back or consolidating. So because each time you have a strong down move like this, which is known as an impulsive move, there's always little consolidation, right? Because many people will be taking their profits and all of that. When you see the next sharp move like this, there will be a consolidation and all of that. So after this consolidation, we are probably going to have the next down move. So what we are doing here, we just have to mark out our key zones in this level. So we can use the horizontal ray tool, okay? So we just mark out these key zones from the bigger time frame so that we progress to smaller time frames. Look at how I'm marking the bodies of those candles, right? So price could potentially pull up to these zones here as well, but now we are doing a top-down analysis. We drop further to the smaller time frames like the H4 as well. So from the small time frame like H4, we can see here we have a consolidation, right? Price has actually consolidated, but right now you can see that price has created a new low below here, okay? But at this top we have a major resistance. This is a resistance that we have here. You can see we just mark it as a complete zone because it's not a single zone here. We have it as a resistance zone, and if you look critically, you can see that price just violated this zone here and then broke down to create this resistance, and then it turns like support. So if you extend it, you're going to see something like that. It's like initially it was a support that turned to resistance, right? You see how price was consolidating here, and when price consolidates and breaks out, it's most probably going to take the next move. So here we have this to be the support zone here. All right, now there are two angles in which we can look at this. If you look at it properly from this already, you can already see that price is already considering taking the next impulsive move. So if you see here, you see that price, when price got rejected here, price created a low. So meaning that what, price broke through this previous low here. This was a previous low here that was created, okay, and price has already broken through by creating this new low. So price actually pulled, when it created this new low, price pulled back, created another low, broke this low here. All right, so when it broke this low, now price has pulled back to the major resistance zone. And then what implies, it implies that there is a possibility of price creating the next low here, okay? So probably here price creating the next low by moving down. So probably you can get something like this, and price will create the next low, right? And then probably price could continue going down. So here we already know at the back of our mind that we are going to be looking for sell trades. Now if you look at it in another angle, if you are a swing trader, for instance, now there's a possibility that you can look for a short like this based on this ranging nature here, okay? Because this is the 4 hours, and then you can be targeting the market like this. All right, so but now if you look at it another angle, if you jump further to smaller time frames, let's say the H1, okay, we are just doing a general analysis here. You are going to see that this is like a liquidity clear scenario here, okay? Let me just clear this out. You see that here we have equals highs, right? These are equal highs that were created here. Okay, when this equal high are created, meaning that price have not rejected, price rejected here, and then after creating this low, right? Remember, this is the low that led to this low, this high led to this low, this high led to this low. So probably many people who have been expecting to sell here, okay, in fact many people already sold here, while others even placed what sell limit orders before price got to this zone here. You get? So when price normally, because if you put your charts like this, guys, so tell me what we expect. Most traders will be selling here, right? Others will be placing buy limit or sell limit orders there, so that as soon as price gets here, he executes the order, then they want to be targeting this zone, all right, of which it will not always happen. What happened here? Price goes up with this long candlestick after inducing. This is what we call inducement. So this consolidation here is to take the impatient traders that are impatient, thinking that the market will and leave them. Some people jump in here earlier because they think that, oh, I want to catch the next move just like this ones, right? So what happens? Price goes up and clears off liquidity above there. So when price clears off this liquidity above there, what happened? It closed below the zone, right? So when it closed below the zone here, goes back now to mitigate, right? It's going back to mitigate because in this scenario we have people who place buy trades here to move price up, like the institution, and then they place sell trades to move down. So when price goes now, they'll have to move price here to come and mitigate their negative orders. So here now we have a probability of mitigation and selling from here. Price could sell up from this zone here, all right, and then move down. So that is the probability, all right. But now if you look at it here, if you want to just consider the resistance as a general resistance here, you can also look at what we call double top pattern. You get? Because a double top pattern is actually a reversal pattern, so you can consider this to be a double top pattern here, right? Let me go back to the H1 time frame. All right, this is like a double top pattern here. Okay, so with a double top pattern, remember it is a sign of reversal. It is a sign of reversal, and here now we can also expect for, if you want to wait for further confirmation, instead of not just selling directly from here and placing our stop loss above here, we can wait for price now to create what? Another low. When price create a low now here, and then we confirm, we wait for price to pull back. Maybe we mark out, people trading maybe based on supply and demand. You mark out your supply zone there, and then you sell. You wait for price to create a low, you wait for a pullback, right? You sell until when price gets to this zone below here, because normally here we are actually, the first trade, the initial trade was actually based on swing, right? If you enter here, you have a good account size, you enter here with a stop loss above there, that's really quite wide. Okay, but if you want to wait for further confirmation, maybe you have a small account, then you wait for confirm, you wait for price to create, start creating lower lows. You can use other indicators, you can use other patterns to enter trades, maybe like trend lines and all of that. When price start creating lower lows, right, you are going to be looking for maybe like trend lines. You wait for price to pull back and then reject, you enter. You wait for price to pull back and then it enters, you enter. You get the point, except otherwise, all right. But this is the probability that we have. But if it happens that price breaks through and go upward, which can still happen, remember this is trading and we based on probability, then price can be heading to these zones above here, which we marked from the daily. So it's from the daily time frame up here, we are going to be looking for what patterns to be selling. Or in fact, if it breaks through now and start going up, creating highs, we'll now be looking for what buy setups until price goes and then reach up here. Then we're now looking for sell setups to start shorting right down to this one. So these are weeks of forecast. You get the point. So basically that's it. So you just need to be flexible with the market and always remember that anything can happen in the market. We deal with probabilities, all right? When we say there's a higher probability of price going down than going up, but it doesn't mean that price cannot go up. Or if you say it's high probability of going up or coming down, it doesn't mean that price can not come down. So that is basically what you should put at the back of your mind, and always use good risk to reward ratio. You are going to see that the market is going to play out in your favor and you're going to have bigger advantage. All right, so basically that's what I have for you for volatility 75. Remember, this analysis can be applied to all market structures, to all markets, okay, because it's price action. You see the same things happening when price rejects in a zone for more than once or behave in a particular way, it can repeat itself. So what we did, we simply went to a bigger time frame. We marked out our key zones, came to smaller time frames, we identify our key zones as well, zones where price has rejected more than once and twice. Then we look at market structure. Is price creating new lower lows? Yes, price is creating new lower lows, indicating that there's a possibility of a downtrend, an imminent downtrend. Remember, this was all consolidation for a long while, right? So there's a possibility now that price can be moving down to start creating good lower lows, and from there we're going to be looking for good short setups. So basically that is it, guys. And from there, from H1 time frame, you can look for, confirmations. You can wait for confirmation for price to create new lows. You can look for chart patterns breakout, and then you are looking to sell until price gets to the zone and you ensure that it breaks through. So that is how you can do your analysis and get very good trading opportunities. So thank you so much for watching. If you found this video helpful, please give me a thumbs up. Make sure you subscribe to the channel if this is your first time by hitting on the subscribe button and notification bell to not miss out on any video that I'll be posting. See you in the next video.